Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon, we have Mark Marex, Senior Index Specialist with Nasdaq Index Research, to discuss Nasdaq-100 performance. And Mark, let's take a look at your first slide here. We saw some really decent action over the past week. So what does the relative strength index look like right now?
Yeah, sure. Great to be here with you, Jill. Last time we did one of these check-ins, I think was around 2 months ago, when the NDX was also setting some marginal record highs at that point. So, looking at this relative strength index, which really kind of measures momentum, technical momentum across the index on a 14-day basis. You can see that purple line. What I've outlined is the line of 70. Above 70 usually means overly bullish sentiment. And then above the other line above that is 80. Anything touching 80 is getting very, very kind of overly bullish and overheated. And I've circled kind of the last time. You have to go all the way back almost a year when we touched 80. And also when we exceeded 70. So right now you can see we're still below 70, even though we've set those fresh new record highs this week. It's been kind of a slow, gradual grind up to those new record highs. When I look at this, I'm not seeing anything in the way of, overly bullish, overheated momentum sentiment kind of getting ahead of itself.
And let's take a look at your next couple of slides here. You're looking at the short-term moving average, and then we can also move along to the long-term moving average. What are you seeing there?
Yeah, so here, this is, what I've circled on the short term. We've got the 20-day in purple there. We've got the 50-day in red. The last 4 times, really, that we've crossed below either one or both of them, you can see the last time was kind of in late April. We had a bit of a correction there, but it's been kind of smooth sailing since then. Those short-term moving averages are sloping upward again now. And so, if there were to be a pullback, we'd look for that support to be in the high kind of 13,000s to around the 14,000 index level on the NDX. But looking pretty strong in terms of not getting too above those averages. Again, consistent with that RSI analysis, it's been kind of a slow, gradual grind up, and overall pretty calm advance for the index towards record highs. Can't always say that.
And finally, Mark, you take a look at options positioning. What are you looking for there?
Yeah, so I've been trying to keep track of this, notion of the retail market getting overly bullish at times and buying up a ton of calls. You can see that has driven, when you look at the, long-term trend lines of 5 to 6 years going back, that trend line is sloping downward. What you're looking at there is the ratio, right, per the SIBO. The overall ratio of puts to calls in the U.S. equity market on a 1-week rolling average. You can see that ratio has been declining pretty consistently for a number of years. All that means is that there's, fewer puts out there for each call that is open and outstanding out on the market. So what I've circled is that we're actually coming up close to that trend line right now. We've been below it for most of this year so far. And that's, again, another indicator to me that says from a retail options positioning, it's not overly bullish. There's not as much of the call buying going on so far, in the start of this summer as you had last summer, where, people were speculating that the index was getting a little too far ahead of itself because of all that kind of bullish retail options activity.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.